Hi, this is Mohan Kumar from Brainy Bulls, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's look at the Nifty chart for May 11th, 2023, and see what kind of entry and exit signals the strategy has triggered. Let's have a quick look at the charts. Great. You're looking at the two-view chart in the TradingView platform. So you see the Nifty spot chart on the left, Nifty futures chart on the right. Both these charts are set to a 3-minute time frame. So before we bring the three custom indicators on, let's have a quick look at the price action for today. So the price kind of opened higher than yesterday's closing. As you could see, it was a decent gap up on the spot chart, right? On the futures chart as well, there was a gap opening, as you could see here. And post the open, the price swiftly moved below the previous day's close, as you could see. Then it moved, it actually reversed from that point, and then it consolidated for most part of the day, as you could see, a huge consolidation, and then there was a sharp fall towards the end of the day, right? And today being Thursday, the weekly expiry, there's a bit of a volatility, and you could see it was very difficult to actually spot some good trades, right? Because of a huge consolidation, almost between 12 and 2:30. So now let's bring these indicators on and see how these indicators triggered signals for us to enter and exit into trades, right? Um, these indicators I've spoke enough about them in my previous videos. If you have not have looked at any of my prior videos, please do go check on those videos where I've talked about how to use these indicators, how to actually look into the price action pattern in conjunction to the signals triggered by these indicators, right? So these indicators, the first indicator is called the locations of the price level. The second indicator is the market participation, right? The third indicator is the trend meter. So I've placed three indicators on each of these charts. Now these three indicators are not the same. They are different in nature. At least the participation and the trend meter indicators are differently, customized, configured to work on these two charts differently. But the locations indicator is is a similar, it's the same indicator on both these charts, right? They are nothing but the locations, like the pivots, the previous day high, low, close, and the and also you bring in the resistance support zones from the past price action data. Okay, now let's look at the same chart with these indicators applied. As you could see, again, the price opened way above the previous day high. The black line on these charts is the previous day high, right? And swiftly it moved below the previous day high. As you could see, the moving averages are kind of moving higher, right? It's raising higher. The price moved into the moving averages. Now, as you could see, the trend meter also moved midway, right, to the 50 mark. But do you get into a trade right here? Now, for the first 30 to 45 minutes, we observe the market. So it's 9:45. It's the right time. But as you could see, the price swiftly moved below the previous day high, which is considered to be as one of the major location. So getting into a trade right here is not a high probability setup, because the price might find a stiff resistance around the previous day high, right? But as you could see, the price, sort of, had some participants around this particular area, but the price moved above this, and it found some kind of a resistance at this zone, which is the day's resistance. So usually, when the price moves below a particular location, it'll have to retrace back to that location, and then if it finds a proper resistance, and based on the moving averages on the trend meter, we would take a short position. But if the price moves further, right, and if there is another location, that location might act as a stiff resistance. But in this case, as you could see, the previous day high was like kind of broken from above, and it was broken from below as well. So it has no significance at all. So this previous day high can be ignored because it has been compromised from both sides, right? But the price, when it moved towards the resistance, you could see, price is kind of like pausing, and it tried to reverse. But since we get into a trade right here, we do not, because we don't have enough participation. But since the price even crossed above, it may consolidate around the previous day high. Like you see, there was a minor consolidation, but at this point you could see that there were some hammer candles, which indicates that the price may lower, will move lower further below the previous day high and into the moving averages. And also you could see the moving averages around this area, they're all kind of flattened out, right? So when the moving average is neither sloping downwards or upwards, when they are flat, they have low significance and they can be easily broken. So we have seen that in many of the videos. We've discussed about such price action patterns, how you read those price action patterns in conjunction to the indicators. So this is one such pattern. It's not a high probability setup because of the reward, because you might find a stiff resistance around this region, right? Around this particular region. That exactly what happened. So you could have taken a trade right here. It's not a high probability though, but it's a decent trade. So the trade is going to be, there is a beautiful participation, right? So the price moves below this. So this is the entry point, and above this is going to be a stop loss. So it's always going to be very limited. The risk is very limited, and you actually stay into the trade as long as the trend meter moves into the green zone and the price is in a certain location and finds some kind of participation. So as you could see that when the price moved to this region where it initially found support in the morning's action, the price when it came to the same location, it actually, we could see the volume coming up with this volume candle. You can see the participants like the blue and the black dots. So this indicates that the trend may reverse, right? Or it may consolidate from this point onwards. So this is a very good move. It's a small trade, but still it's a decent move, and you could have actually capitalized and taken some profits out of that. And do you get into a long trade right here because of the participation location and the trend meter? No, because it is below the moving average. The price may find resistance around any of these moving averages. So we do not get into a trade in a haste around this. We wait for price action. If the price retraces back to the same low point or towards the CPR, and if it makes some strong reversal patterns from here with the trend meter being close to the green zone, now yes, we would have taken to a trade, considering the reward is also good enough, because it can find resistance here. So from here to here, it could have been a good, but unfortunately, that was not the action for today. As you could see, the price moved above the moving averages. It kind of like dropped back into the moving averages, and then it actually moved, and there was a consolidation for most part of the day, uh, afternoon, right? So there's no absolutely no trade here, because we did not get clear signals from either the price action indicators or the candlesticks, right? So, and it is all mixed up. The EMAs are all mixed up. It's within two major locations, so there is no trade right here. But as the price moved, away from the previous day high, as you could see, it swiftly moved here, and this is the zone where previously, we have some kind of resistance, right? And it's the same zone here, as you could see on this particular chart. It's the same zone right here, and you could see the participants coming in. You could see the participation here. So this is the right place where you would get into a trade, right? So this exactly is the candle, the hammer reversal hammer candle with the volume. So that candle's low is going to be your entry, and this the same candle's high is going to be a stop loss, right? This is aggressive stop loss, but this is the stop loss that I would trade on, right? And you stick to the trade as long as, look at the trend meter, it is kind of declining, but the price from this point was kind of like raising. So it's a price trend conflict. The trend to the upside has weakened, as indicated by the trend meter. Okay, a declining trend meter, right? On this particular chart, it is rather flat, right? So this is a very good spot for you to enter into a short position, and boom, and beautiful trade to the downside. So it's two decent trades that you have taken. Both are short positions for the day. So this exactly is how we find trades. Even when the price is moving within a narrow range, we still found a beautiful setups based on the indicators, based on the price action and candlestick patterns. So we trade based on facts. We do not trade based on guess, or we do not expect or anticipate moves and then put our money into it. If you like what you're seeing, please like this video and please subscribe to my channel to get notifications on any new videos that I may post. And also, I have formulated a beautiful course that's called the uh, Triple Threat Intraday Strategy course, which is an end-to-end course targeting beginners and experienced traders. If you would like to know more about it, drop me a message to my WhatsApp or email ID to get to know more. So until I get back to you with another video, it's bye from me, and take care of you and your loved ones.